Inflation continues to moderate. July's monthly figure on both the headline and core figure holding steady at 0.2%. That all-important core number also ticking down on an annual basis. The report is likely to encourage those thinking the Fed won't raise rates in September. Joining us now to break this all down, we've got Yahoo Finance reporter Jared Blikre down there on the floor of the New York Stock Exchange. I mean, I can clearly tell people are reading into this down there on the floor, Jared, and just running around telling all their friends.
There is actually a bit of excitement on the floor today. Don't know if it's CPI, maybe they're excited about a couple tickers, but nevertheless, it is nice to see people down here. But I do want to talk about some of the subcomponents of CPI, especially in energy. And I'm looking at the Wi-Fi Interactive. We have a couple of these broken down. These are month-over-month changes. Fuel oil, that is up 3%. That's 300 basis points in 1 month. That is a large amount. Gasoline, 0.2%, quite a bit smaller, but still going in the wrong direction. Utilities up 2%. That's 200 basis points. And only electricity moving in the right direction, and that is down. That is down about 0.7%. But a lot of these subcomponents, including fuel oil, gasoline, these guys are down 20% or so year over year. So we're looking at market declines in the year over year numbers. But my concern is that with these incremental gains in the monthly figures, have we bottomed? Are we in fact moving up again in inflation, especially with respect to these energy prices, which have experienced some moderation? So sticking with the Wi-Fi Interactive here, I want to pull up crude oil. Let's do a year-to-date chart, and we can pull up some candlesticks and really see that it is finally just barely broken the upside. It broke this trading range that had been in all year long, but really when you take a look at the 1 year, that explains some of the drop because we're still down 8.84% year over year in WTI crude. Not as much as we were at the March and May lows here, but we are nevertheless still down. But you'll notice over the last couple of months, ticking up. So on the year over year basis, still looking good. But the concern is that on month over month, we're ticking back up again. I can show you something pretty similar for the S&P, for the Goldman Sachs Commodity Index. Here we have, looking back 1 year, we are up against this 600 resistance level, but we have accelerated to the upside over this last 2 month period. Similar theme here. And then I want to take a look at natural gas. You can see natural gas down 65% or so year over year, but let's take a look at the year-to-date figures. You can see ever so slightly getting back up to that 3% or that $3 level, and that was actually reached and peaked in early March. So if we head above these current levels, it's pretty much a race to the top here. We've seen natural gas inflation, natural gas prices react very quickly to changes in the weather, not so much the macro environment, but it is a very volatile commodity, and we need to respect the fact that it is up substantially itself over the last 2 months. So going back to the original case here, a lot of these subcomponents just moving the wrong direction on a month-over-month basis.